The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. We'll go ahead and get started now. Thank you so much for joining us today for the Tensoft webcast on Tensoft revenue recognition. We will go ahead and just go through a few slides to sort of set the stage at the beginning, and then Bob Scarborough will do a brief demo. Just real quickly, I know Bob has a lot of content to cover today, so I'll be very brief in my introductory remarks here. If you've not used GoToWebinar, it is the same as GoToMeeting. There is a panel on the right-hand corner of your screen that allows you to ask questions by just typing in that question box and then hitting send. That will send us a question. Please feel free to do that anytime, and we will get to questions at the end of the presentation. Anything that's not answered at that time, we'll follow up with you later. So please do feel free to send those in any time. So with that, I would just like to introduce Bob Scarborough, who will be our presenter today. He's the CEO and co-founder of Tensoft. And another slide about questions, the ask a question pane there, and there will be a survey too afterwards. If you would fill that out, that's very helpful to us, and we appreciate your feedback. Bob will be beginning the presentation with some slides and then concluding with a demo. And again, feel free to ask questions anytime using the question pane to the right-hand side of your screen, entering that in and hitting send. So without further ado, Bob, I'd like to turn it over to you.
Thanks, Caprice. I'll start with a little bit of background about Tensoft and then get to our main topic, which is really moving away from spreadsheets to a revenue recognition system. And so we want to cover, in that regard, some background on spreadsheets, some background on revenue recognition, and some proposed solution criteria for you to use, and some of the ways we see our products fitting that criteria. So in terms of Tensoft, we are a software company. We're located, our headquarters is in Silicon Valley, but we do have support centers in Europe and Asia to match our customer locations, which are across North America, Asia, U.S., North America, and so on. And so really we are located where tech is, and if there's one basic takeaway from here, 150 technology companies, and really a focus on business systems, the unique functionality required for business systems for technology companies. One of the things we'd like to throw out here, and there are always case studies and testimonials and things like that along with companies, and we do have subsidiaries for EMC and IBM and so on using these revenue cycle products. There is one of the case study or fact sheets on our website is specifically about a company that moved away from spreadsheets to our RDM product or one of our revenue management products and found substantial benefits in doing so. And so that wanted to point that out up front here as part of sort of background information on customer testimonials and our foundation, which is really success with customers. In terms of a visual to see where you can find us and our customers, we do have our locations in India, UK, and US. We have some partner locations, and the customers, again, would be where you would expect given the way technology works in the world today. Briefly on our product lines, we have sort of three main focuses or maybe two main focuses and a supporting setup. And so we do have some operations management, we do have the revenue cycle management of the dashboards, and this really gives us a foundation both in terms of our company, a little bit of diversification, but also really deep focus areas in the technology industry where we're used to adding value to providing out-of-the-box functionality that can be extended to get people ramped quickly and efficiently and with the functionality that's needed to do your job. So wanted to switch to technology company revenue management here and to spend a couple minutes just on some background. A lot of this will be familiar to people that have revenue recognition backgrounds on the call. So first couple slides will be sort of redundant possibly, or just making sure that we have everything up to speed here. In terms of general principles of revenue recognition, I think these are pretty generally used out there. We borrowed this specific slide from a series of webinars that Jeffrey Werner does for our company on revenue recognition issues and challenges. But this is in terms of revenue recognition, and this is pretty much for everybody, but has some specific meanings in tech. Persuasive evidence that there's an agreement with the customer, you've delivered it, the fee is known and determinable, and it's collectible. And where this starts to get complex for our customers and technology industry is in the delivery area, where it could be that you have channel or you have requirements to deliver to a customer, and so delivery can be a challenge to define. And then what is called a multi-element arrangement in terms of multiple elements in a single transaction. And so you may have a single SKU or a series of item numbers or a series of item numbers that are related to each other that present challenges for revenue recognition. And just in terms of general, the sort of classic software support, maintenance, installation, training are items that are considered related to each other or a multi-element arrangement. But it also is true of embedded software, where a smartphone is a series of a service, a phone, and software. And so you can have different revenue recognition models based on these different elements and based on how to value the independent elements as well as to consider delivery, which is that the maintenance is going to occur over time. Software value may occur up front unless there's a dependency for delivery, and so on. So we start to get these complexities fairly quickly in technology revenue recognition, either because of challenges related to delivery, which would be timing-based or channel-based or delivery to the customer-based, or the fact that it takes a period of performance to deliver it. And so that there does tend to be for multi-element arrangements specifically, and for a lot of these sort of more complex, there's a two-step process where we need to separate the revenue pools into each individual, the relative delivery and item numbers that are relevant for revenue recognition, and then we need to allocate value to those, and then we need to apply, of course, the revenue methods to the allocated value. So a little quick background on technology industry revenue recognition. Hopefully people on the call can start to place themselves into some of their own complexities and how this would relate to them. So a lot of the call today was to talk about spreadsheets and revenue recognition. And there may be people on the call that have another system or have built a custom system. And so, you know, it might be different starting points for different people. Very common still, and certainly if you consider technology companies as an arc, and that there's a lot of new companies created and a lot of energy there, and then there's the scaling activity, and then there's the big companies. But even in large organizations, spreadsheets are still fairly prevalent, even if they're not for all the transaction flow, or it's not an entirely manual system. There's still places, and so trying to capture some of the areas here that people use spreadsheets and revenue recognition for creating the accounting entries. So it may be offline computations, turning into spreadsheets and supporting documents for that, to create schedules for revenue recognition. So amortization, planning things out, looking to future periods, reporting internally or externally on these revenue streams, applying allocation rules to the separate elements, performing revenue contribution analysis, or any one of a number of things you could think about in terms of revenue information being diced or sliced up to represent whatever critical information helps drive your company forward. Redistributing revenue for some of the compliance goals, the 97.2, EITF 0801, or if you have construction accounting required for some of the postponed delivery on software revenue recognition, just the different standards for revenue allocation or redistribution among the item numbers in the multi-element arrangement if you have one, or the revenue rules that are applied. Reviewing sales transactions, taking sales transactions out of a system, analyzing them independently, and so on. So, I mean, there are a lot of areas that people end up with spreadsheets, and they do tend to proliferate, that once you started in this path, it's really common for people to end up with multiple spreadsheets in revenue recognition. Some related activities that people may have offline tracking for, recurring invoice tracking or recurring transaction analysis or renewal rate analysis, agreement administration, and so on. So I think that gives us at least a reasonable picture of the types of things that people use for spreadsheets. My guess is almost everybody finds some familiarity in some of these activities that are being done in a manual instead of an online way. So, I think people that use spreadsheets, there are some benefits, and certainly that's where a lot of companies start. They're certainly flexible. They do present challenges, and it's important to deal with the challenges here, and to address them. And if there are current challenges, these are some of the things that drive a push to a solution. And it is a change in mindset to have a solution that manages revenue from the spreadsheets. But probably the most common one are the first couple here, which are that's very challenging to have internal control over a spreadsheet. That its flexibility is offset by a lack of tracking and the ability that anybody can update it, or who's going to update it, and how to track it. And so you have the auditability and traceability of changes to the spreadsheet, of it was something last week, it's something different today, what happened, and so is it a manual comparison to saving every version, or how exactly do you maintain traceability? I think everybody knows the statistics for margin for error in spreadsheets, that once you hit 100 lines, the consulting firms and other folks out there basically said that that once you hit 100 rows in a spreadsheet, you have at least one error on average, and so on. And so people that get up to thousands of rows in spreadsheets, or even hundreds of thousands of rows, have errors built into the spreadsheet. It becomes almost impossible to find and track. And an error and something like this could be significant or insignificant. It could cause you to overstate or understate revenue, or overstate or understate forecast, and so and the errors magnify and proliferate as well. I think some of the less common challenges, but things that if you step back and think about it, are also challenges, maybe just not the things that come first to mind, is that in spreadsheets, when you're trying to do them, and most people are trying to do a really good job in the spreadsheet, so they're trying to overcome these first three issues, you spend most of your time logging transactions in instead of analyzing the output. And so much care is spent on putting the transactions in just right in the spreadsheet so that things come out just right, is that it switches, and it's a lack of productivity or time that the team could spend on analyzing and utilizing as opposed to creating. Because the spreadsheets proliferate and there's usually 2 or 3 different versions for different purposes, you end up with this sort of lack of a single source of truth and a single error or errors or traceability that starts to get into one spreadsheet, ends up with this the ability to have 2 or 3 different answers based on where you look, and it's hard to, then the reconciliation challenge of going back through and trying to identify where things come from is a big task. And maybe even more subtly, but more importantly, is that spreadsheets really are based on the knowledge of the person using the spreadsheet. And it becomes challenging to scale your organization, to let people take a vacation, you almost end up with one of your most qualified people maintaining the spreadsheet, or somebody whose whole job becomes doing this, that then there's a firewall around and it's hard to know what's going in and out of there. And so it becomes challenging to grow your organization over time with either this one person being the critical resource or the ability to manage this. And so if you start to think about a system here, a system, kind of from some of these challenges should have something that has controls, has productivity, has processes built into it, so that the knowledge base and the repeatable transactions that are done in the company are built into the system, not into the mind of a single person, that there should be more focus on analyzing and reporting the data because the transaction flow is easier, and so on. So I think it's worth knowing both why people move away from spreadsheets, as well as what some of those requirements are important to think about when looking at a revenue recognition system. So I think in terms of summarizing, moving beyond the spreadsheets, you need to find something that meets your revenue recognition requirements. So is that compliance? Are there specific revenue methods? What sorts of data do you want out of that, and what sort of reporting would you like to see? How would you like this information to do that? There's a understanding your market model, and we're going to kind of cover things in this order, and then finding your system. But this is really, if you think about it, revenue is where we're starting today, and revenue is a specific set of transactions. And by the time you boil it down, revenue could be, once you separate and allocate and apply revenue rules, gets to be more common among different companies. But it is important to understand, do you have compliance needs? What are the methods you need in the reporting? And then we have this go-to-market model, which is really how are your transactions created? And it becomes important to match to your revenue recognition system, because you need to understand how you're going to be productive by having your system model your business models, how you're going to capture the appropriate multi-element arrangement based on where the agreement exists, how you're going to manage change to transactions, and so on, and then fit your. So we're going to handle the rest of the presentation today along these 3 bullet points. So understanding revenue recognition, your go-to-market model, and then finding system and fit. So in terms of revenue methodologies, we're really looking for defining the transaction. And so is it a multi-element arrangement? Is it a summary? Is it detail? We're looking for the model for delivery, and that gets back to revenue needing to be delivered. So is there a period of performance? Is there dependency? Is there acceptance required? Does some event need to happen for delivery to be considered? And then how you handle returns and change. And change can be anything from your customer service desk extending an agreement for a month or giving somebody a free month, to returning, to moving from the gold plan to the platinum plan for a support agreement. And so really change and returns a lot of times may be just 10% of the revenue transactions or 5%, but they might recognize or be half of the complexity in your revenue recognition model. If you're looking at compliance or the need to do a separation of value for a multi-element arrangement, you have this need to consider revenue versus billing, that the sale may occur. And in the particular sales example here, we have software and a subscription, maintenance, and services. And then the sales process, the customer has been told that maintenance is free, that they don't need to pay for maintenance for the first year, it's included. But when we do the revenue separation, whether it's by the residual method or by the relative value method or whatever else it is based on what our compliance model is, we end up with some revenue value for all 4 of the items in question, and we end up with something that's a revenue recognition method applied. And so here a deposit is a non-revenue item. The subscription and maintenance are future delivered items, and the software is an immediate delivered item. And it's a little bit of a mix. You probably wouldn't have a subscription maintenance at the same time, but you might. And so just a rough example of so we have our general revenue recognition, and then we have this for special stuff for this multi-element arrangement. For us, our revenue engine is something that will take in the transactions from this left side here. The big blue arrow over there really gets into business model or go-to-market model, how your transactions are created, what the source of those transactions is. But once we have this transaction, which is a multi-element arrangement transaction or a single transaction from a sale, or however that's created, it's going to go into the revenue engine. And then we're looking at a rules-based methodology that says we're going to apply rules for your items. We're going to apply rules to potentially document flows. So different document flows could have different treatment. We're going to determine value allocation. And so we do support EITF and SOP requirements for revenue recognition. And those things are going to go into this pool, and that will then create your subledger, create your revenue recognition, and do all your reporting and analysis. And so this is where we start to say, in a system, our goal is to capture the transaction based on your go-to-market model, set up the rules ahead of time, and then we can focus less on managing each transaction in a spreadsheet, more on computing, posting revenue, and analyzing. In terms of revenue compliance, just for the folks that have this, it is a big deal. So just to make sure on the left-hand side here, we have some of the multi-element arrangement requirements with the SOP and the EITF 0801 types of things. The framework for analysis on the other side is really how we analyze or help people separate out the requirements related to compliance into a determination where we're setting a fair value on a quarterly or annual basis. We are applying the revenue value to the separate elements in the multi-element arrangement, and then doing revenue recognition. So in terms of go-to-market models, this is where we'll touch a little bit on this, and then we will cover a little bit more at the end. But this is where there will be a little bit of uniqueness among people in the technology industry, because where we have that revenue model back here, this flow, the flow can be similar for people that sell through a channel, where their only event is that we have a rule that says wait for future event from outside salesperson, and then we get a transaction that moves it in, or we get a compliance or a subscription or multi-element arrangement model. But now in terms of making a system fit you really need to think about how you interact with the customer. And it's probably intuitive to you for your internal company because this is what you do. But when you're looking at systems in a market, not every system has thought about how you make your sales and is not specifically fit for your business model. And so that becomes an important criteria for considering outside systems. So, types of things, I think these identify a lot of the core or the main ways that people do business in the tech industry. You may or may not, find your exact model here. You may have 2 or 3 models. I think there's one of the first splits is really whether you sell directly to customers or whether you sell indirectly through a channel. And the direct sale actually, even sometimes when you sell to a channel, the channel is just finding the customer for you, and you still have the agreement with the end customer. So sometimes it's a little muddy as to which is which. But with customers, there tend to be 3 main models, and one of them is what we call the enterprise agreement, where it's a big customer relationship. It's enough that there's a legal agreement, simple or complex with them. There's multiple things to deliver in this. Could be a subscription, a renewal, a setup fee, or it could be software maintenance, as complicated, business process outsourcing to enterprise software sales. to subscriptions. The web sales model is sort of the opposite of that, which is the high volume, low touch, usually lower dollar transaction. So where in order to have an enterprise agreement model, your agreements with your customers are probably 10,000 to a million to as big as it can be. The web sales model, you maybe have $50 transactions or $100 transactions, and really productivity requires you to do that as low touch as possible. The product sales is really for people that are selling hardware with software as a component of it, and so these are considered software type companies because of the need to have a multi-element arrangement. But for them, it's really sales order based. You may have embedded elements within a single SKU or separated elements. You need to manage shipment and third-party logistics as well as the revenue recognition process. So different models there. Indirect has its variety of things too, whether it goes through a distributor or it's a licensing or it's a consumer product model and hybrids of these sorts of things. But I believe that gives you a feel for it. And we're going to cover a little bit about 3 of these models to give you a feel for people to try to identify themselves in these things and then to take that knowledge in terms of applying to moving beyond spreadsheets to finding a system that works for you. So the first one up here is a product sales model, and for a lot of folks, what we have is a order to schedule to ship to invoice model, and scheduling and shipping, of course, is pulling items from inventory. And in terms of the multi-element arrangement for this, if you need to separate out revenue, if you need to recognize maintenance as well as software and hardware support, the agreement is really the order with the customer, and you need to capture information at multiple points in the process because delivery may be based on shipments, delivery may be based on point in time, financial information could be changed on invoicing, and so on. And so the multi-element arrangement is really needs to, the capture of information needs to follow the flow of the sales order to ship to invoice. And there are some things that are specific to this process that it's probably the most challenging in terms of capturing the appropriate multi-element arrangement as well as the updates to it, because you could have partial shipments on an order. You can have carve-outs from hardware to a service component that the service component may be partially delivered and handling residuals and so on. So, I mean, the goal today isn't to try to get into all the complexities of these things, but the complexity here tends to be capturing the multi-element arrangement on the updates and handling embedded products, billings, orders, usage, and so on. They tend to be far more straightforward. Compliance is usually EITF 0801, possibly some of the stuff with the construction accounting in terms of delivery dependencies. If you compare that to a pure web sale model, a high velocity online sale, and we've got some good-sized public companies using our product here, some larger organizations, and these people, everything from personal ads to data services to security prevention, whatever it is, you're paying $49.99 a month or $100 a year or whatever else it is you're paying for. We have this sales process that's happening on the website and a sales transaction, and really the focus here is on capturing that efficiently. The blue in the middle becomes our product, and the gray on the right-hand side is your financial system. It's really how can we capture those transactions. The customers are usually not managed in the accounting system because it really doesn't pay in your ERP system to capture a $50 customer, and so they're managed on your website or your product platform. And we're looking to efficiently capture, analyze, recognize revenue, and also to manage change. I mean, change becomes a big deal here. So the challenge here is really on volume and velocity, that if you have a $50 transaction that a customer service person gives them an extra month of support, how do you handle that? How do you efficiently manage change? And we can do that both as capturing an individual transaction and extending the date, or looking at something where we would group those. I mean, they're just different methods to doing it, but as required, we can go all the way down into individual transactions and push that extended date across so revenue is created in a hands-free, no-touch way. So accounting, once they kind of get comfortable with this and see how it works, can basically count on the customer service systems and the website driving the sales information that they need to accurately relate revenue or create revenue. So transactions here, we really want to leverage the investment that you have in your systems with your customers. We want to do an integration with a web service or an efficient integration. If required, we want to do revenue separation and reporting. And change management becomes a big deal here because a small change to a small transaction may be important for revenue recognition and for auditability and traceability, but you can quickly make sales transactions unprofitable if somebody in accounting needs to touch every $50, $100 transaction. And finally, the last one I'm going to cover is the enterprise agreement model, which is still very prevalent, certainly in the business-to-business space, in the higher-end subscription space, where there's a contract, and the contract is multiple elements to manage for a customer. You are creating invoices for them. The separation of revenue from invoicing, it becomes really important here, either driven by the contract revenue recognition or the invoice revenue recognition. Your accounting system's in the green on the right-hand side, and you may want to be linking this into your processes for the contract really governs a broad set of business transactions with a customer, and so it's important to capture if there's usage-based billings, for example, time or data storage or overage user counts. If you want to link to your sales process, to your CRM, if you want to push information back to your CRM help desk system for who's on support or whatever else it is, the contract becomes really a central point to managing your company, and the rest of this, making sure this is an efficient flow of data, revenue. You can spend enough time on the contract to do the touches, but again, you're looking for a process that allows for organizational scalability, auditability, traceability, without having to depend on spreadsheets here. So some of the items here related to the enterprise agreement model. And that's really what we wanted to cover in terms of the go-to-market models and the revenue requirements. And so if you kind of think about where we've come before we look at our product here and do a brief demonstration, is that we've come along to look at what is revenue recognition and what is required for your revenue recognition. And that's really a very focused area on something that may be in spreadsheets for you today or in some other type of homegrown system, which is how do I capture that information in a place where the elements are defined, the revenue rules are applied, and revenue is recognized, and I can do an analysis and reporting. And then the second thing in terms of finding a system that helps you do that revenue recognition is taking a step back and saying, what is my go-to-market model? How do I sell to my customers? And how do I make sure that any solution that I look at for revenue recognition captures that transaction flow efficiently so that I can push the data from that transaction flow into the revenue recognition engine and then move forward. So at this point, we wanted to move over to a product demonstration. And I'm going to log into an application here. And so for folks not familiar with our solutions, it is a web-based application. And so it's so we need to, there we go. So we have a revenue recognition and set up here. And so there are a few different things here that we wanted to cover. But I think in general, to cover some of the main points in terms of scalability or system expectations today, most people are looking for web or internet or cloud-based applications. And so this is a cloud-based application. And it's running using cloud technologies and is accessible as a cloud-based subscription application or an on-premise application if required. Some of the things to look at here in terms of purely revenue recognition. If we're coming into compute revenue, we've got a compute revenue, and compute revenue is as simple as coming in and saying, okay, now I want to, for a particular company, for a particular method, and so the methods defined here are percent complete, a couple of different amortization method, a milestone method, and so if I come in and say I want to look at my percent complete as of a given date, it goes out and finds my percent complete transactions out there, and these can be uploaded, or these could be integrated with a web service, or these could be manually created. We're coming here and say, all right, well, my percent complete for that one is now 25%, and you hit update and so on, and so then you now have a 25% revenue recognition transaction for a percent complete. Things like short-term, or which is really sort of things that are immediate or days-based revenue recognition. These things become pretty easy to review and inspect and so on. And there's really nothing to do here other than the chance to look at it. And the longer term or straight line here is more of a month based instead of a days based, and the milestone is the milestone. So there are, depending on volume, there are mass compute options as well as regular compute options. And so the mass compute lets you do this by revenue method or item number, and you just go through and say, I'm going to upload my milestones and my percent complete. I'm going to select my short term and so on, and then rather than going through transaction by transaction for review, I'm just computing all of my revenue, sending that out to the system, and then going ahead and posting it. So there are ways to do traceability, but just a couple different ways to compute revenue, to post revenue, to look at history. If you have a compliance perspective, you can see that. If you have transaction history without a compliance perspective, you can see that, and so on. So general information here related to the process. There is a lot of traceability and reporting. So other items here for deferred revenue analysis would be deferred revenue analysis by as of date. And so this is your subledger report. So I can pick a date here and say I want to see deferred revenue as of the end of last year. And you get a report with quite a bit of information. It has your transaction number, your document type, your item number, the original revenue allocated. Cost can be recognized the same way here. So if you have cost of goods or royalty cost or any other cost you want to apply by item number or SKU, that can be done. But you have the posting transaction entry that went across to your ERP system, when it was posted, how much revenue has been recognized, how much has been computed, not yet posted, and so on. And all this comes out to a revenue remaining transaction total here, which appears on your ledger. There is the ability to take all of these reports to Excel, Word, Adobe, the PDF, CSV file formats, and so on. So all this data is available both in a reporting view, as standard reports, as well as the ability to dump that out to other systems. And so there's a variety of things here. I mean, we can look at what revenue has been recognized. Transaction details will let us go through and pick a specific transaction and look at the audit traceability for a transaction. And so you can go through and see an original multi-element arrangement coming into the system and all transactions that went in against it. And I'm going to go back and do a prior year and see what that looks like, and so on. So, but then this, if you think about the ability to support an audit, this is not the sort of thing you want to go to every day, but if you want to support an audit, it's nice to be able to pull up a specific transaction, and for that specific transaction, see all the detailed drawdowns against that transaction and how much revenue has been posted each time, and basically going all the way back to the revenue rules applied to it, when they were applied, any changes that have occurred to it, any extensions of the end date, all revenue that's been recognized. There's that traceability all the way back into detailed transactions that can be useful. So I think that's a little bit on the deferred revenue management. Some of the things are more challenging to illustrate in a short period of time. So the sales order process of order to ship really requires pulling data from your ERP system. and pulling that data into our revenue engine. The website is really focused on efficient transaction capture. And so one of the things that is here that can be useful for people is the enterprise agreement model. And so I'll just pull up an agreement briefly, and we can look at something that has a web sale or any one of these types of things where if you have the challenge of managing agreements with your customers, a contractual relationship, this is your contract with your customer from a business perspective, a business management. And so it has heading information here. It has the ability to track revisions against the agreement, multiple purchase orders possibly from the customer, has the ability to manage the revenue at the contract basis instead of the transaction basis. The important dates to remember, email notifications can come off of these dates. Information here related to user-defined data or documents attached. The item numbers down below here, if you have recurring schedules, what those recurring schedules are, pricing for utilization, billing, and so on. And so this is really the goal here with a contract is to take your information for the contract and to summarize all the required transaction information in a single location so that you can manage the customer efficiently, make sure that you don't forget to bill something, make sure that recurring invoices go out, make sure that all required delivery are taken care of to make sure the customer is taken care of. And there are other things here in terms of if you wanted to import transaction data or creation of invoices, revenue download, and so on. There's quite a bit of functionality in our tools, along with the ability to configure the system for specific business models to optimize to how you do business and how you go to market and how we can capture the revenue. And the last thing I would say, and we do have people doing in terms of scaling your organizations, I think some specific information we've seen coming back are, one, in the enterprise agreement model, you do end up with scaling your contract administrators based on your contract volume. We have some people who have fully automated the contract administration by doing web service integration to their CRM systems, in which case they've streamlined, even with 10,000, 20,000 contracts, the number of required administrators. We've seen people, I can't think of anybody that needs more than one person to spend some of their time in revenue recognition once there's a tool in place. There may be multiple people analyzing it, but revenue recognition becomes much more streamlined and scalable and trustworthy basically because of having an automated system. Month-end closes are much more much quicker. And actually, if you think about some of the reporting, by having the data in the system, we can do a revenue forecast from your deferred revenue. And so the forecast falls out of this. The forecast for contract based on future billings falls out of this as well. If you're looking at bookings analysis, there are a couple different ways to capture bookings and so on. That gets really to that single version of truth, having the data in a database, and how can I efficiently manage that. That really helps you move forward in terms of being able to utilize and analyze information, focus there instead of on transaction capture, manual manipulation of data. So there's one other thing I wanted to show today, and then we'll see if we have some questions, and that's just going beyond standard reports, going beyond dumping data to Excel, to playing with the data here. And so this is basically something where I'm just going to go through and have direct access to the data. And then this is a data cube, a data analysis, and so on. And I'm going to use Power Pivot today. You can use any one of the standard reporting tools, a report builder from SQL Reporting Services, the Cognos tools, the TM1 tools, whatever you're interested in using. But I think this kind of model is familiar to people, and the ability to have. And so I'm taking around and looking at spreadsheets here, and so we're not anti-spreadsheet. We just think spreadsheets should be focused on analysis and reporting and analytics, and not on transaction capture and management. And so once I have this data in the system, I can come through here and say, I want to see, all right, well, I care about contract numbers. And so I've got a lot of contract numbers, and I want to see, well, in this particular case, I'm going to look at my billing totals here. So I have some total billings, and maybe I care about time, and so I want to see billings by year. Or maybe I want to see billings by year, by quarter within the year. And so now I can see those and start to get some trends and what a lot of people would call a revenue waterfall, where you can go through and see revenue recognition. Maybe I want to look at customer here and customer underneath the contract, and the customer is actually probably more interesting above the contract, where I can see how multiple contracts with a single customer here and how this falls. But again, once you have this data, we have created these cubes and these pivots to get the data out, and you really have a wide open range of possibilities in terms of analyzing, reviewing, using your data beyond what's available. If we had to capture our revenue in a spreadsheet and to capture all our business processes in a spreadsheet, this sort of thing becomes extremely hard. One, because it's hard to format the data to do this. Two, because the time available to do this type of analysis is limited because you're spending most of your time capturing transactions. So that's really the material we wanted to cover today. Appreciate everybody sticking with that. And Caprice, are there questions we need to address, or is it?
Yes, there are.
As anybody wants in a given day. So.
There are a few questions, Bob, and anyone who wants to send in any other questions, please feel free to type those in now in the question box and hit send. So the first one here for you is, does RCM handle recurring billing management for multi-year agreements, i.e. before the value determination and rev rec?
We do, and so we do handle billing arrangements, and we handle that in our enterprise agreement model, and so we do allow you to do it in what we think is a very efficient way. And so I'll go in and pull up one of these guys and look at a subscription here. But really, it's you, other than setting your values and ignoring for a minute the challenges of escalations in future periods and so on. I want to give people a feel for how to do something along this, and really it's as simple as creating a calendar. And so if you've used Outlook calendaring before, this will be very familiar to you, where I can come in and say, okay, I have no specific end date because this is going to end when the contract ends. I'm going to bill monthly the first day of every 12th month, and it creates a schedule for me. And if I wanted to create a new item number and create a new schedule, basically I put in the item number in, I put in this recurring calendar in, and then if you have enterprise agreements, basically anytime the agreement gets extended by another year, this calendar automatically extends for you. And so you can end up with every year you push out to the customer, you may do pro forma, you may confirm with them, whatever your process is for renewal beyond the initial term. And it's as easy as extending the date, and all of your recurring schedules will go out and extend. But to answer the question directly, absolutely there is the ability to do multiple invoices here and to have them on schedule so that you don't have to manually remember them and don't forget the invoice and don't lose sight of what revenue can be recognized.
Thanks, Bob. Another question, we license intellectual property. Does your software support this model too? So,
that was one of the models we didn't spend a lot of time on. It is important for people that have it, and anything from patent portfolios to embedded solutions, OEM arrangements to, so it's over here under one of our indirect models where somebody may be selling it or doing activities for you and then sending you transactions. It is actually still a model where you do capture things in an agreement and you do manage things. And so what we have when we do those sorts of transactions, usually the variables are, there's often some sort of a fixed service that covers either a support or sort of a minimum. There can be minimums based on the items that are tracked, and the royalty itself can be based on a percentage of dollars or units or whatever the other transaction. So it's the ability to capture their data from the licensee on a quarterly or annual basis, to import that transaction into the agreement and have it priced to create the appropriate invoice, to also remember whatever recurring invoice transactions are required. So yes, absolutely, we do handle the IP licensing. It's an important business line by itself. It's still a little less prevalent than some of the other models, but yes, absolutely.
Thanks, Bob. Next question is, our company anticipates growing to several 100,000 revenue transactions per year. Have you worked with companies with similar high-volume environments?
You know, we have people doing, I believe, in excess of 500,000 transactions a month, and we have people that sometimes the sales will come in 1 week, and so it works out effectively to almost 500,000 transactions a week. We have people with 20 million transactions in the system, and you know, this is actually an area where we have replaced competitor systems on the market, because they literally, you know, especially in somebody doing a web sales model, where the whole goal is to get to very high transaction volume, and there are people who want to track those as individual transactions and to manage them. So yes, absolutely. That's actually not a challenge. Some of the reason that those mass compute options, mass post options, mass review options exist are really so. You know, the only sorts of things in those is we do spend a little more time helping people decide how they want to analyze their data, because with a large volume of data, it's important to get your summaries. But absolutely, that is a, you know. If you looked at the area where we spent the most time, the three business models we've shown are very common, and certainly we've done some well-known names in terms of high-volume web sale transaction support.
Thanks, Bob. Sorry, I was muted there for a minute. Another question that just came in, and if you could let me know if you need clarification on this, I'll just read it as it's written. How many points of entry are into this system? Would it multiple entries into our accounting system and into the software? We currently use GP10.
You know, so you know, GP going to a specific ERP, and certainly, you know, we have deep experience with GP. It's so if you take a look at ERP in general and specifically GP, we have some things that are very out of the box for GP, where there's master data that's available to the system. So customers, item numbers can be shared, foreign currency conversion, sales tax. You have all the sort of setup information that can come from your ERP system that does not need to be re-entered in our system. So that's an important point, which is data validation of master tables, accounts. You know, that sort of things that go back to the ERP system are if you're using the enterprise agreement, we will push billings back. If you certainly revenue recognized will go back, and if you were somebody who used unbilled receivables, if you had contract-based revenue where you had billing and revenue totally separated, that would go back as well. So, you know, a couple touch points for revenue recognition and touch point for billing going back. So, I mean, it's a pretty clean. It's not a, you know, there's not a lot of touch points. The broader question on how many ways that we can get data in to our system, I mean, that's, in case that's more the question here, in terms of information flow here, we have people, even folks using GP, that are pulling in data from their website, pulling data in from GP and their website, pulling in data from external systems to the revenue recognition, and still integrating it back to GP. And so the model can be website to our system to GP, or it can be GP to our system, or it could be the contract administration in our system to GP for driving invoices. But all those things work, and I think we didn't spend as much time on that today in terms of the focus being spreadsheets and why move, but ERP integration is an important part of the equation for us, and we do that well. We integrate to the receivables ledger in your ERP system and GP so that you don't have to recreate the invoice. We integrate to the GL for revenue recognition. We incorporate your customer information into the process.
Bob, another question that came in, and you've sort of touched on it now already a little, but seems to relate back to the slide too. Can RCM pull sales transactions from any CRM system?
That's the beauty of web services, and we actually have multiple methods here now for external system capture. So you can think ERP or enterprise agreement are a couple ways to pull sales transactions. But we have 3 other ways to pull in transactions mechanically, and one of them is upload from a spreadsheet. One of them is load from a table, and one of them is a web service. And so a web service can do system-to-system communication to any web-enabled application. So we've linked to Salesforce.com. We've linked to a number of different web sales platforms, e-commerce platforms, where we're capturing those transactions and moving them in. We have people that have a data warehouse in-house because they're managing their website or CRM system in-house, and they do a direct-to-table, or people that are ramping or really just need a revenue tool who upload it from a spreadsheet. So we have definitely spent time thinking about how to make this productive, integrated into your whole environment, and to manage revenue effectively. And so, yes, absolutely, we can pull in from pretty much any CRM system that has either a web service or the ability to kick out a file or the ability to do a database-to-database connection.
Okay, thanks, Bob. It looks like one final question. Does RCM support carve-outs?
It does, absolutely. And it supports them in both the embedded product model as well as the rearrangement and the multi-element arrangement. And so absolutely we do. And so that's one of those things that can mean different things in different scenarios, but it usually means either single SKU with multiple item numbers or reapportionment of value from a multi-element arrangement where the software fair value is reduced and maintenance is increased, or whatever else it is. But absolutely we handle carve-outs.
All right, great. Thanks, Bob. So those are all the questions we have for today, and I thank you, Bob, for the presentation, and thank you all for attending. Just to let you know real quickly, we will be having another webcast. This one will be CP eligible. It's on the FASB IASB exposure draft on revenue, and that's going to be on the 13th of March. So please join us for that as well, and it will be, you can earn 1 CP credit if you would like for that. So thanks again. Please do fill out the survey when it comes to you, and let us know if you have any follow-up questions. We'd be happy to answer those. All right. Thanks, everyone. Have a good day. Bye-bye.